Welcome to the Deep Dive, your ultimate shortcut to being well-informed. Today, we're plunging into the Q2 2025 earnings results from NetEase, the Chinese gaming and internet powerhouse.
That's right.
If you're looking to cut through the noise and understand what truly moved the needle and what's next for this fascinating company, you are absolutely in the right place.
Definitely.
We'll extract the core insights, leaving you well-informed without the information overload.
Absolutely. This deep dive will unravel NetEase's financial performance, key strategic moves, and the immediate market reaction.
Right.
Giving you a comprehensive picture of their current standing and future trajectory.
Okay.
The big question we're addressing today is, how did a slight revenue miss weigh against, well, impressive growth in their core gaming business and an ambitious global expansion strategy?
So let's jump straight into those headline numbers for Q2 2025 then.
Let's do it.
The company reported GAAP EPS, that's their earnings calculated under standard accounting rules, of US $1.88 per ADS. That's the American depositary share, representing shares traded in the US.
Right, for non-US companies.
Exactly. And their non-GAAP EPS, which often gives a clearer picture by excluding certain items.
Yeah, the underlying performance.
That came in at US $2.09 per ADS. Notably, pretty much right in line with what analysts expected, around US $2.07.
Right. And what's truly fascinating here is that while EPS met expectations, total revenue did show a slight miss.
Okay.
It came in at US $3.89 billion, just under the consensus of US $3.95 billion.
So about US $60 million.
Yeah, about 1.5%. And, while that might sound small for a company this size,
It still matters to the market.
it does. It was enough to cause some caution. Shares traded lower in pre-market initially.
Okay.
But, and this is crucial, despite this minor miss, total revenue still saw a healthy 9.4% increase year over year.
Right, so still growing nicely overall.
Definitely.
Okay, let's unpack this a bit more. That 9.4% year-over-year growth in total revenue, which is RMB 27.9 billion in yuan. You said it was overwhelmingly fueled by their gaming segment. Seems like that's really where the power lies.
Absolutely. The games and value-added services segment was, without a doubt, the main growth engine. It leaped 13.7% year over year to RMB 22.8 billion.
Wow.
And this isn't just, a sign of strength. It highlights their successful pivot. They're moving from just chasing volume to delivering really high-quality, high-engagement titles.
The kind that drives sustained revenue.
Exactly. It's a key differentiator in today's competitive global gaming market.
Makes sense.
Now, their online education segment, UDOW, also posted some pretty impressive growth, up 7.2% year over year to RMB 1.4 billion.
Okay.
And what's more, UDOW actually delivered its first ever Q2 operating profit for learning services.
First ever. That's a big deal.
It is. A significant turnaround, really shows their strategic adjustments are working there.
But it wasn't all green shoots across the board, was it?
No, not entirely.
Cloud music, for instance, saw a 3.5% year-over-year decline to RMB 2.7 billion.
That's right.
And their innovative businesses and other segment experienced an even larger dip, down 17.8% year-over-year to RMB 1.7 billion.
Yeah, quite a bit steeper there.
So what's behind those softer spots?
That's a great question, and it really speaks to the nuanced picture within their diversified portfolio.
Right.
The decline in cloud music. That was mainly due to a higher proportion of revenue coming from online marketing services.
Which have lower margins.
Exactly, inherently lower gross profit margins. But it's worth noting, cloud music's gross profit margin itself still improved year over year to 36.1%.
Okay, so they're getting more efficient even if the top line mix shifted.
Precisely. Successful monetization and cost optimization efforts are paying off behind the scenes.
And the innovative segment softness.
That was mainly attributed to a pullback in Janssen advertising services and some other smaller ventures.
Got it.
But despite these pockets of weakness, the overall financial health looks robust. Total gross profit actually increased by 12.5% year over year.
To RMB 18.1 billion.
Yep, landing at a very strong total gross profit margin of 64.7%.
That's solid.
And crucially, operating expenses were incredibly tightly managed. They actually decreased by 0.6% year over year to RMB 9.0 billion.
Decreased. Wow. That's a powerful sign of efficient operations.
It really is. Running a lean ship, as you said.
So how do these operational results translate into their cash position and, what they're giving back to shareholders?
Right. This brings us to a critical indicator of long-term health. The company generated substantial cash flow, RMB 10.9 billion, in operating cash flow.
Nice.
And they maintained an incredibly robust net cash position, RMB 142.1 billion as of June 30th.
142 billion yuan? That's a huge cushion.
It is a significant increase from the previous quarter, too. It gives them immense flexibility for future investments or, navigating any economic bumps.
Yeah, capital returns.
They declared a Q2 dividend, US 0.11140 cents per share, or US $2,570 per ADS, payable around early September.
Okay.
And their ongoing US $5 billion share repurchase program, which started back in mid-January 2023.
Still going strong.
Yep. They've already used about US $2.0 billion of that, repurchasing around 22.1 million ADSs through the end of June.
So the whole picture signals strong balance sheet health and a clear commitment to shareholder returns.
Exactly. They're basically telling investors, we're profitable, we're cash rich, and we're giving back.
Okay, we've delved into the hard numbers, the financial health. Let's zoom out a bit to the broader picture. What was management's strategic narrative during the call?
Right.
Their CEO, William Ding, emphasized this vision centered on high-impact, genre-defining games, highlighting things like product innovation, disciplined execution, and deep community engagement. What does that actually mean in practice?
Well, it means they laid out a pretty rich pipeline of upcoming titles.
Right.
Names like Marvel Rivals, Sea of Remnants, and Blood Message, which is interesting because that's their first AAA single-player title.
Oh, really? A shift from their usual multiplayer focus.
It seems like it. A significant move. They're also heavily focused on what they call the globalization of IP.
Taking their game franchises worldwide.
Precisely. Taking popular IPs global. This shows a really clear strategic shift, moving from being mainly a China-centric hitmaker.
To becoming a globally diversified IP operator.
Exactly. And they're tailoring their approaches for different markets. North America, South America, Japan.
Based on what they're learning from games already out there.
Yeah, based on firsthand experiences with games like Marvel Rivals and Once Human in the West and things like Identity V and Knives Out in Japan. It's a calculated bet on achieving global scale.
Speaking of global presence, the renewed momentum from their Blizzard titles in China seems like a big factor. Almost surprising, maybe.
It's an incredible comeback story, really. The reignition of community activity from those Blizzard titles has already surpassed pre-shutdown levels.
Surpassed, wow.
Yeah, it speaks to a deep, really loyal player base over there.
So what are the highlights?
A major one is the planned China-exclusive Titan Reforged server for World of Warcraft. That's set to launch in November 2025.
Okay, coinciding with the 20th anniversary in China.
Exactly. It's a huge deal.
Yeah.
We also saw Hearthstone's Lost City of Angoro expansion climb to number 5 on China's iOS top grossing chart.
Pretty good showing.
And Diablo 2 Resurrected is coming back to China later this month, with Diablo 3 also on the horizon. It's not just about returning titles, it's about reigniting these massive communities.
And meanwhile, new game launches and updates to existing titles clearly made an impact too. Sounds like they're hitting the charts hard.
Absolutely. We saw several live titles achieve really impressive top download or top grossing ranks across different platforms globally.
Examples.
Well, Fragpunk hit number 2 on PlayStation North America's free-to-play chart after it debuted in late April.
Okay.
Dunk City Dynasty reached number 1 on download charts globally after its May launch.
Yeah.
Marvel Mystic Mayhem launched overseas late June, passed 1 million players, ranked number 2 in the US.
Strong debuts.
Yeah, and what's truly compelling is how they're not just launching new hits, but also sustaining these evergreen titles.
Yep.
Like Fantasy Westward Journey Online.
One that's been around forever.
Right. Incredibly, it reached a new all-time high of over 2.93 million concurrent players in early August.
2.93 million after 22 years.
22 years after its initial launch. It's amazing.
Incredible longevity.
This dual success, new launches, and sustained classics, it speaks volumes about their content strategy and their ability to foster these enduring communities.
Yeah, definitely.
Even Once Human's 2.0 Dreamville update pushed it to number 4 on Steam's global top seller chart. And interestingly, its user base is split roughly 50-50 between China and the rest of the world.
And the revenue.
Revenue's about 2.3, China versus the rest of the world. So that really underscores their growing international footprint.
Wow, 22 years and still setting records. It makes me wonder about the tech behind it all. It sounds like a lot of these games, old and new, are getting a boost from cutting-edge tech. How are they leveraging AI? Is it just a buzzword for them, or is it really integrated?
That's a crucial question, and it goes right to their commitment to innovation. It's definitely not just a buzzword. In UDOW, for instance, their education segment, they've implemented an AI-native strategy.
Meaning?
This includes a proprietary large language model called RLM Confucius, specifically for educational uses,
Right.
and an AI-driven ad placement optimizer that handles complex tasks that used to need human experts.
Okay, so real application there. And in gaming.
For game development, yeah, they're investing heavily, integrating AI into their tool chain, their operations, everything from generating content to optimizing player experiences.
And long term.
Their long-term vision is even to develop AI native games, where AI isn't just a feature bolted on, but plays a central defining role in the game's design, its evolution, how players interact with it.
Interesting. So a deep strategic commitment.
Absolutely.
And finally, they had a significant governance announcement as well, didn't they?
They did, yes. Kokshon Johnny Chan was appointed as a new independent director effective August 14th.
And the significant.
It signals enhanced governance, better board independence, reinforces the company's commitment to robust oversight, long-term stability. It's generally seen as a positive step for investor confidence.
Got it. So after that initial cautious reaction we mentioned earlier, the pre-market dip, how did the market ultimately digest all this information from the call? Did it recover?
Well, the stock opened at US $123, which was that 8.8% decline from the prior close.
Right.
However, it did partially recover throughout the day.
Right.
It closed at US $131.86, which was a more modest 2.2% decrease from the prior close.
Okay, so it clawed back most of the losses.
Pretty much. And trading volume was significantly elevated, about 1.35 million shares. That's roughly 2.3 times the 3-month average.
So heightened investor interest, lots of activity.
Definitely. So while there was that initial knee-jerk sell-off on the revenue miss,
It seems it was tempered.
yeah, tempered by the underlying confidence in their strong gaming momentum, the robust cash generation, and that strategic vision we talked about.
It certainly seems like, despite that top-line miss, the long-term strategic narrative remains compelling. Like, investors are looking past the immediate number to the bigger picture.
I couldn't agree more. The company's consistent capital returns those dividends. The active US $5 billion buyback program. They really underscore the balance sheet strength and that commitment to shareholder value.
Yeah.
And if you look big picture, NetEase ADRs, their US-traded shares, have actually outperformed the China Internet ETF KWEB over the last year.
Showing resilience.
Exactly. Resilience even amidst broader market fluctuations. The industry backdrop helps too, with more supportive gaming approvals in China this year.
Though competition's still fierce, presumably.
Oh, absolutely. Competition remains intense. But their long-term strategy evolving into that globally diversified IP operator through live ops, cross-platform expansion, partnerships.
All while consistently returning cash.
Right. It really sets up a very strong potential long-term growth story, a compounding story potentially.
Okay, so what are some of the immediate catalysts investors should be watching for? Things that could really move the needle in the near future.
Well, near term, keep an eye on continued Marvel Rivals events and how it scales on consoles and PC.
Okay.
The anticipated global rollouts for Sword of Justice and Where Wings Meet.
The big global IP push?
Exactly. Seasonal updates across their flagship titles, always important for engagement. That highly anticipated World of Warcraft China server launch in November. That's a massive event.
Definitely one to watch.
Upcoming dividend payments, the pace of regulatory approvals in China, and of course how quickly they acquire users internationally.
And the buyback execution.
And the continued execution of their buyback program. Yeah, there's quite a lot on the horizon.
All right, this is the part where we stretch the bounds of plausibility just for a moment.
Okay, let's have some fun.
This is purely for thought experiment, and as always, this is not financial advice. We're just talking out loud here.
Understood. Completely hypothetical. So given that strategic emphasis on reigniting Blizzard titles in China, and specifically that highly anticipated November 2025 launch of the World of Warcraft China exclusive Titan Reforged server.
Okay.
Here's an idea. Imagine initiating a short-term, maybe out-of-the-money call option strategy on NetEase ADRs leading into early November.
Okay, the outrageous part being?
The outrageous part is betting on a single game server launch to significantly move a company of NetEase's massive scale.
Right, that seems like a long shot for a giant company.
It does. However, the plausible element lies in World of Warcraft's deep decades-long loyalty in China.
We saw the reignited momentum already surpassed prior levels.
Exactly. And the sheer potential for this massive, dedicated server to unleash a wave of dormant, potentially high-spending players.
Tapping into that nostalgia and loyalty.
Right. This could create an engagement and revenue surge that maybe isn't fully factored into the current valuation yet, especially given the market's initial caution on the Q2 revenue miss.
So it could trigger a surprising short-term pop.
Could trigger a pop on engagement metrics, maybe unexpected monetization. A true dragon's horde scenario for gamers and maybe some investors, hypothetically, of course.
Hypothetically. Okay, so to wrap up this deep dive then, NetEase delivered a Q2 with inline EPS, but that slight revenue miss.
Yep.
Yet that truly showcased impressive growth in their core gaming segment and really remarkable financial discipline.
Very disciplined.
Their strategic pivot towards becoming a globally diversified IP operator, bolstered by a strong pipeline, deep AI integration, and that powerful reignition of major titles in China. It paints a very compelling picture of future growth.
Precisely. And the company is actively returning capital to shareholders, continuously strengthening its governance.
Yeah.
It all underscores robust financial health, even amidst this ambitious global expansion.
This all raises an important question for you, our listener. In a world where AI is rapidly evolving and gaming IPs are going truly global, how will this balance between innovating entirely new experiences and revitalizing beloved evergreen titles shape the future landscape of the entire entertainment industry? Something to ponder.
Definitely food for thought.
Thank you for joining us on this deep dive. We hope this has provided you with a clear and comprehensive understanding of NetEase's recent earnings and their strategic direction.
Hope it was helpful.
Until next time, stay well informed.